Good morning, everybody, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's an interesting week of trade. It's a big week of trade, by the way, simply because both on the macro and the micro front and the geopolitical front, there is lots. I mean, so aside of the Kazakhstan, Russia, China, and the Russia, Ukraine, US, or NATO issues that we will have to grapple with, and I guess these have now become a constant. It's a big week ahead because India, US, and China CPI data come out this week, and I think since inflation is top of mind for everybody, this is something that we will be watching out for. In terms of US earnings, it's a big week for banking earnings because Citigroup, BlackRock, JP Morgan all come out with numbers. From an India perspective, while there are a bunch of others as well, or not a bunch of others, some other earnings as well, it's a big week for tech simply because TCS, Infi, HCL Tech, and Wipro, all of them come out with numbers. So the start of the earnings season is always exciting from an IT perspective. I think as things pick up, mid-cap IT, some of the banks, etc., all come into play. But this week, it will be all about large-cap IT from an Indian markets perspective. Now, the US market futures, I mean, what the US markets did is fine, and they came off. But I think the US market futures are also trading with a mild bit of red. If you see the top three lines out here, viewers, that's the Dow, the S&P, and the Nasdaq, and the futures have fallen a little bit. So the Qs early morning aren't exactly the best. Asia too is probably going to start off weak, but the key thing is what is leading to this is the tech tumble. We've been talking about it. That remember last week, coincidentally, we saw that chart of how whenever Apple hits a landmark, it tends to come off and bring the markets down with it. Look at this chart, which shows how Microsoft and Alphabet as well are set for their worst weeks since March 2020. That tells you a story or two about how worried the market is about higher rates and a higher DCF. You understand that. We have for maybe that some of you who don't understand, essentially higher interest rates would lead to a higher discounting factor and therefore lower multiples for all companies. And because tech companies are so richly valued, people would start thinking that even if the earnings were to stay stable, would the valuation multiples come off? And which is probably the worry which is leading to some of these tech companies coming off. Asia, like as I said, likely to start off slightly wobbly, and the SGX Nifty too flattish to maybe marginally in the red. I would reckon it is. I haven't even seen the SGX Nifty. Oh, I'm a bit surprised really, but Asia too is showing a bit of a red. So you probably start off flattish, maybe in the green, but I really doubt if we can really perk up and trade in the session now. Um, why do I say that? Frankly, just before we get to trade setup, if we can just very quickly pull up the MOV function and just show what happened on Friday, and then I'll tell you why I said that I thought that the SGX would be flattish and the markets could be flattish. But the MOV function will probably tell us what happened on Friday last week in terms of market breadth, just Friday, and in terms of the stocks that moved around. So clearly, the market breadth was even Stevens, no big shakes either direction, but you had a bunch of mixed, a mixed set of stocks doing well. So cement as a pack did really well, and metals were doing okay, as you can see the mid cap and Tata Steel, Long Products, National Aluminum Company, or Nalco, or some of the others. So those did okay, but it was a very mixed set of names with there being a KPIT Tech out there, presumably on that Goldman upgrade or a Spark or a Valiant or an Asahi India Glass. So fairly mixed set of stocks which did well. And at the losing side as well, individual pharma names came off today. Heikel was amongst the key losers, and I reckon that will continue today. But mid-cap pharma certainly came off quite rapidly in the session. So what is in store for today's session? I doubt that the advanced estimate of GDP really alters the direction of the markets too much. It's a good number, but I don't know if it has a material impact on what the markets do. Some people are already saying that it's a bit too bullish. So the trade setup, I would think that the Nifty direction for this week is largely to be at the mercy of the Bank Nifty. And why do I say that? Because I reckon that IT would probably see some buying ahead of the results. So that is a very distinct possibility. So if Bank Nifty were to do well, then the Nifty per se will do well because IT will anyways give support. If Bank Nifty does not do well, then you probably have opposing forces at play and the index stays very, very flattish. Of course, the globe will determine a large point of what happens to tech as well. But I suspect that because of the TCS announcement and because of the fact that 4 Nifty companies coming out with results, all of which are expected to do okay and might bring a surprise, there might be some buying in large cap IT in the run up to the TCS numbers. So, but we might see some bit of that happening this week itself, and I'll tell you why in a moment. Of course, all of you know also. But just the point, the last point of the trade setup, the dealing rooms that I spoke to, all of them are constructive on mid-cap capital good related suppliers and real estate stocks. So do watch out for that. I mean, this whole bucket of stocks, which is the SKF India, Honeywell Automation, ABB, and smaller names, Nelcast, Rolex Rings. There's a bunch of names out there which analysts and dealing rooms are pretty bullish on. I have no idea about some of these, by the way, except for the fact that we did a very good interview with SKF India, which you might want to see. It was done about a couple of months back. But data side, I don't have too much of an idea. And real estate, by the way, we've been talking about this, but the numbers that I'll talk about tell you a story or two about what some of the real estate companies are doing. Really good show. FIs bought about 496 crores and DI sold about 115 crores. So not too much of institutional action in Friday's session for sure. Stocks to watch, and that will tell you a lot about why my trade setup was constructed the way it was. So IT, right? Nifty IT and TCS is going to consider a buyback along with the results on the 12th of Jan. Now remember, the company's done 3 buybacks in its history, 17, 18, 2020. All of these buybacks go to the tune of circa 16,000 odd crores. Now, could they do another 16,000 crores? And therefore, would that be a large enough buyback? Could it be larger than that? That's the other question, of course. And what's the pricing really? Now, multiple variants of pricing estimates come in. I must tell you, even if I tell you that this is likely to be the pricing, don't believe me, because I doubt really that most people get the pricing right. Yes, the only analogy that you can draw is in the past instances, the pricing of TCS from the time the buyback was announced was at a X percentage premium. Please go and calculate that. Could that be an estimated or guesstimated or a educated guess? Yes, it could be. But otherwise, be careful about this whole pricing rumors. They'll all float around in the next 3-4 days, really. So just be mindful of that. But suffice to say, it will be at a premium. And that's a no-brainer, really. You don't need me to tell you that. So that's TCS. I would suspect it'll start off well today. And I probably, maybe the buying that I was talking about over the course of the build-up of the week might all happen today. But watch out for the others as well, is the limited point I'm making. Infi, Wipro, HCL Technologies, which could have a good quarter compared. The last quarter was not a good one, so this time could be a good one. So watch out for all of that. Avenue Supermarts, the numbers came out. I mean, not that they were a big surprise compared to what was given in the advanced estimates. So 9.4% margin. I have done YOY, by the way. This is YOY. Keep this in mind. 22%, 25% growth in revenue and EBITDA, margins expanding as well. Morgan Stanley came out with actually everybody's come out with a note. I'm giving you the Morgan Stanley note. So that is something that you might want to watch out for. They've upgraded the stock to an equal weight with a target of 4338. They're saying that they like DMart's impressive margin delivery despite the deteriorating product mix, and the earnings beat their estimates via the better margins, and their target price is 4338 given the improving business fundamentals and trailing stock underperformance, which is true, by the way. It's been a big underperformer. But I just want to tell you, viewers, that aside of Morgan Stanley saying this, everybody else is chalk and cheese. So JP Morgan is underweight with a target price of 3955. They believe that optimism is reflected in the share price. Jefferies is underperformed with a target price of 3800, and they believe that the stiff valuation is the reason why they want to stay underweight on Avenue Supermarts. Credit Suisse is underperformed with a target price of 3600. They believe extremely stretched valuations and potential moderation in growth rate from online grocery. So it's a mixed bag. UBS is a sell with a target price of 3500. The current price is 4731, as you see. So mind you, Morgan Stanley is bullish. The others not so. Macquarie is bullish, by the way, outperformed with the target price of 5450. The only one where the target price is higher than the current market price. The only one amongst the 4 or 5 global brokerages that I saw. The other stock in focus could be Tata Steel. The India's crude steel production rose about 1.5% for Tata Steel sequentially. Overall deliveries were lower by 4% for Tata Steel, and clearly showed that exports did not do well. So increase in domestic deliveries was offset by lower exports. And I think there was an Investec note which said that the India sales volume, according to them, was about a tad lower, and they are indicative of inventory buildup for the quarter, which could be across companies. And yeah, if not for COVID dampening demand, one can expect the inventories to be cleared. So do watch out for that as well. But that's on the India piece. The global piece and the fact that exports are dwindling is a bit of a worry. But let's wait and what could do well. What could certainly do well are real estate names. And two names came out with their Q3 update, Oberoi Realty as well as Soba. So Oberoi, the units booked at 371 versus 234, which is pretty impressive. YOY and QOQ as well. The area booked at 10.4 lakh square feet versus 5.1 lakh square feet YOY. Pretty impressive, really. And the booking value at 1965 crores versus 971 crores. I mean, not that Q3 last year was terrible. It was pretty okay. I mean, festive season demand was all good. It just shows that I remember Vikas Oberoi made a statement that they don't have inventory in some of their premium luxury towers in the Goregaon project. And all of this is probably symptomatic of the fact that there is a lot of demand for real estate and clearly shows in the numbers. So good show by Oberoi Realty and decent show by Soba as well. I mean, Q3 sales volume up about 17% at 13.2 lakh square feet. Sales value up 18% at 1,048. It's nowhere as big bang as Oberoi, but it's a decent number by Soba as well. So Bangalore real estate clearly out there at the top of the charts, really. I mean, if you are living in Bengaluru and if you have a house there, don't sell it. It's likely to do really well in the next few years. So good going for both Soba as well as Oberoi. Maybe we'll see them reacting. I don't quite know the business model of 63 Moons, so I'm a bit skeptical about bringing up such names, but I don't quite know what they're doing. But I thought the tie-up seemed impressive. They made a big bang announcement about starting a crypto wire and some other things. But Google Cloud apparently is tied up with CryptoWire to develop blockchain and crypto ecosystem. If they do the whole ecosystem, it would be pretty interesting. So watch out for 63 Moons. I think a stock that could correct today would be Hykel. The Times of India had a report about how there was some chemical leakage in that. The products were of Hykel, which were disposed of in not the prim and proper fashion, which led to some loss of life as well. Very sad, really. Now, I have no way of trying to figure out whether Hykel, I mean, what happened was at the behest of an employee, unscrupulous employee, or with the blessings of the management. I'm no one to say that, but the fact that it happened tells you that the market could be a bit circumspect about Hykel. So do watch out for this one today. Could have an issue. Ipca and Sun Pharma, both of them could be good because for the domestic December 2021 numbers, domestic sales, both Ipca and Sun Pharma gained market share. So both of them could do well. And Indore Star, wherein I think the CEO has stepped down from his position. So maybe I think the CBO, Chief Business Officer, is taking over the post of the CEO. But that's, I mean, I don't know if this was previously announced or no, but if it wasn't, then maybe Indore Star could have a bit of a problem. And last but not the least, Goldman Sachs has come out with a note on SBI cards. They have initiated the stock at a sell with a target price of 654. This is non-consensus, and which is why this is interesting, because almost everybody else is bullish. But they are saying that they see headwinds intensifying due to competition regulations, leading to a slower growth trajectory. They believe the increase in credit losses, this was important, viewers, increase in credit losses, according to them, according to their math for SBI cards at 11% for FY21 versus 4% and 2% for HDFC Bank and ICICI Bank credit card business, suggests structural challenges in the new to credit card customers at SBI cards, and they expect earnings growth to moderate and rich valuations skew the risk reward to unfavorable, which is why their target price is 654 for SBI cards. That's some way down, really. So let's wait and watch if SBI cards has a bit of a reaction. From 926, their target price is 654. Do watch out for this one. That's it, viewers. The markets very likely to dance to the tune of the Nifty Bank because Nifty I.T in all likelihood will do okay. TCS could react well today. Do watch out for real estate pack as well. And watch out for that mid-cap capital goods suppliers. A lot of people are pretty bullish on that space. Thanks so much for tuning in. Have a safe, profitable day ahead.